this is the part of the show where we put a fund in the spotlight, and this week we're reviewing the Old Mutual Top Companies Fund. So Cobie, over to you, a fund that is 1.2 billion rands worth.
Yes, okay. I mean, this fund is managed by Richard Hassan and Neil Brown. They come from the Acsis boutique inside Old Mutual Asset Managers. Old Mutual Asset Managers a couple of years ago decided, and this is actually quite a few years ago actually, decided to split Old Mutual Asset Management into smaller boutiques. So this is a thing called the Acsis. That's the boutique's name. And they predominantly come from a business called Quaestor Asset Managers, which before that was actually BOE Asset Managers. So the fund, as you quite rightly said, there is 1.2 billion. The benchmark is SWIX. I see it's got a fund objective as well, or a performance target of SWIX plus 2% per annum, and that's gross of fees. So that obviously doesn't include the fee, and you can see the TR there on the screen at 1.11. Just looking at the return numbers there for a year, 21.1 versus the benchmark of 24.4. 3 years, 7.9 versus 7.5, and over 5 years, 11.8 versus 11.9. Let's have a look at some of the returns, specifically for the fund. And let's just look at those on the rolling basis. You'll be getting used to this graph. Let me just quickly show you again how this works. What we do is we take the fund return and we take off the benchmark return, which in this case is the shareholder weighted index. And then you get this blue shaded area over here. That's the fund's relative returns. It's the either outperformance or underperformance of the fund. And then on the rolling 12-month basis, we take the other line that you're seeing over there as the shareholder weighted index, which in essence is the benchmark for this fund. So you see during 2007, as the crisis starts to mount, it hasn't yet happened, so subprime hasn't yet happened. You see some underperformance for the fund. The fund actually does pretty good, or pretty well from a relative return basis as the market comes down, and then we see very, very sharp outperformance, and that obviously has this value effect that we often speak about on the show. And then you see the fund's returns are slightly below benchmark as the market continues to cool down. Interesting to see. It will be quite interesting to see what happens to this fund as we continue to see this crisis at the moment kind of playing itself out. Eleni, back to you.
Okay, thanks for that, Cobie. Okay, so Roland, I mean, looking at the holdings within the fund, I see that there's also a bit of exposure to the likes of ETFs, MTN, quite a big holding, Anglo-American, Sasol, BHP, so very much linked within the growth markets of the country and those companies that are very well entrenched in South Africa, I would say.
It's an interesting fund. You're absolutely right. The breakdown there is quite what we call geared to the market. I'd like to know how that fund is doing in this last week and if they've changed their holdings since the end of June. But when we look at the beta, this is a value fund. So just to summarize again what beta does is it shows us how sensitive the fund is to market moves. A value fund tends to have a beta less than 1. So if the market goes up 10%, the fund doesn't go up as much. But that's not a bad thing. It's a lower risk, more conservative kind of way to invest for long-term kind of gain. So at around 0.8, that is the average. But what we've seen, which I find very interesting about this fund, is that prior to the subprime crisis, the beta was over 1. So they were actually, whatever the market's move was, this fund was actually geared to that, probably with the sort of the more geared stocks that they held there. But then just before the subprime crisis, they actually lowered their beta back to 0.8 again. So they actually did very well. And most fund managers wouldn't sort of say that they're market timers, but I think these guys probably have a case to make there.
And also interesting, big holding in financial industrials and the likes of resources. Do you think that we could see a bit of shifting coming through there, Cobie? I mean, resources we know have been in vogue since the beginning of the year. Financials not so much, but things perhaps could be changing down the line. What risks do you see in this portfolio? You
know, I'm seeing such diverse views from managers as far as financials are concerned. Some guys are saying that, look, financials is a place to be. You know, the valuations look pretty good. How much bad can the news get from this kind of point forward? A lot of other guys are saying, well, no, the news could get a lot worse from this kind of in this point forward. You know, that's what makes fund management such an interesting space, is that everybody's risk screens and everybody's kind of valuation screens look very, very different, and the valuations methodologies they utilize there could be subtle differences between those. So I'm afraid we're going to have to sit and just watch the space here.
Okay, I know that you don't like getting involved in all the hype. I mean, we have been seeing a lot of volatility in the markets. Cobie, is this the time where you start just naturally becoming more conservative and offloading some equities?
I keep on saying that, you know, if you're going to be a long-term holder of asset classes, like you potentially could have been for the last 20, 30 years, and you could have made money out of that. I don't know how much money that's going to make for you over the next half a decade. You know, there's a lot of volatility. We've seen double-digit PEs all the way down to single-digit Ps, and it's busy happening as we speak. And then from this point forward, the market can just sort of scream ahead again, and we could get these double-digit type Ps again. So, you know, quite frankly, at this stage, I think a lot of volatility in the market, trading being able to protect capital, all those things become really, really important.
And are you happy with the fund from a skill perspective? I know
At the moment, I like the fund because I'm quite bearish about markets, as I've said on the program many times, and they've dropped this beta way down again. So if the market comes off, this fund shouldn't come off as much.
Okay, Shaun, let's get you into this. Your view of the fund, your sentiments. Have
Look,
you come across this fund?
So I have come across it a number of times. I think the key for me as a planner is to sit and say, well, firstly, this is generally quite a high conviction type fund if you're going to put into a portfolio. What I'd rather see this as is some type of a building block in a greater equity strategy, number one. And number two, if I came across it in a client's portfolio, I don't think I'd necessarily get rid of it, but rather work around it.
Okay, fantastic. We have to wrap very quickly. Last thoughts, Cobie.
On the fund itself, I think the returns have been fantastic for this fund. It has really not been, it hasn't been bad. Let's see what happens. The managers are certainly very skilled, been in the market for many, many years.
But you'd hold off before you find
well,
the fund
well,
out.
you know, if you're looking at it from an asset allocation perspective, you're not holding it you know, just on its own. You know, you would probably want to hold off on your equity allocation or be at weight or slightly underweight before you start buying again.
Okay, and Shaun, I think I'd like to get some thoughts from you. Just lastly, what is the fate of independent financial advisors? Are we going to be seeing more of them or
No,
less?
you're going to be seeing a whole lot less of them. I think if you look just very, very briefly, the average age is knocking around 60 years old. 5 years' time, pretty much most of them are going to get out. Add to that regulatory exams. I'm almost out. I've got 2 more. Regulatory exams, add everything else. We're going to have a very, very much smaller industry going into the future.
Okay. Is that a good or bad thing for you?
That's a good thing for me. I don't know about the rest of
Okay, Roland.
You want a conservative fund for conservative times, so I like this fund, yeah.